Designing your portfolio's asset allocation can be tricky, especially with all of the noise in the financial media. Right now, we're hearing a lot about the US versus international stocks, which makes sense given how well the US has been doing compared to the rest of the world. I actually just wrote an article about that and how you might want some degree of tilt towards the US in your portfolio, not too much, over on the Retirement Researcher site. I've got the link in the description below to take a look at. But there was one big area that I didn't really touch on in that article: whether emerging market stocks have a role to play in your portfolio or not. Now, before we dive in, let's define some terms to make sure we're on the same page. There are really 4 big categories a country can fall into for the purposes of investing. There are developed markets, emerging markets, frontier markets, and then everyone below frontier market status. We're really only going to be talking about developed markets, which also includes the US, and emerging markets. The frontier markets don't really represent much of the world marketplace, and there are usually some significant barriers to investment there. So, leaving aside the frontier markets, let's start with what the global stock market actually looks like. Well, it looks like this. As of the end of 2023, developed markets represented nearly 88% of the value of the world stock markets, with emerging markets covering a little more than 12%. But that includes the US, which all by itself is over 60% of the global market. If we exclude the US, since that's its own part of our allocation, we see a different picture. Now, emerging markets represent nearly a third of the non-US market, and it's been growing pretty steadily. Back in 1990, emerging markets only represented about 1% of the world markets, whether we include the US in the picture or not. But the emerging markets have been getting to be a bigger and bigger part of the world economy, and as such, they're becoming a bigger and bigger part of the global stock market. 20 years ago, emerging markets would have been a tiny piece of your allocation. But it's now a big enough piece that you really need to be thinking about it. In that article I mentioned earlier on home bias, we looked at how you probably want to tilt your stock portfolio towards US stocks, since you're presumably a US investor. But I didn't really get into what to do with the non-US portion of your portfolio. So let's talk that through. Just like always with your portfolio, you want to start with the market. There are good reasons why you might want to make adjustments, like overweighting the US in your portfolio, but the market is your base. And the market is a pretty darn good place to be. But let's focus in on the question of how you want to set up the non-US section of your stock portfolio. Do you have any real reason to move away from the market split between non-US developed markets and emerging markets? Well, probably not in the same way that you would have a preference to tilt towards the US. You probably don't have any real quantifiable ways that you're different from the average investor that would push you either towards or away from emerging markets. But those quantifiable differences aren't the whole story. Preferences matter a lot. You've got to live with your portfolio. And if you're not comfortable with what you've got in there, then it's going to be a lot harder to stay disciplined when the markets inevitably decide that they're not going to cooperate. A good example of this, and one of the things that got me thinking about the role of emerging markets in your portfolio, is actually the portfolio hot seat that we did from a couple months ago. For those of you who aren't familiar with it, the Portfolio Hot Seat is something that we do in our membership site, the Retirement Researcher Academy. I work with them to analyze their investment portfolio and make some suggestions, and then I, anonymously, present it to the group and talk through their decisions. Everyone's retirement is different and unique, but they definitely rhyme. So this is a great way of seeing how other people are dealing with the same problems that you are. But getting back on topic, the woman who I was doing the portfolio hot seat with was an accountant, or is an accountant. So she very much cares about, well, accounting standards. And it really bothers her that the accounting standards in some of the emerging market countries aren't the same as in developed markets. So she prefers to tilt away from the emerging markets and lean more towards, well, the developed markets. There are also real, though small, concerns about capital controls and equal treatment relative to local investors in some of the emerging markets countries. Though those are more issues for countries that are part of the frontier markets and below. What this really comes down to, though, is what you're comfortable with. Does having some of your money invested in emerging markets keep you up at night? From my personal perspective, I just don't think these concerns really rise to the level where it's worth moving away from the market weights in emerging markets. I always come back to thinking about how am I different from the average investor? And I just don't think that I am any more or less sensitive to emerging markets risk than anyone else. For me, I don't really see any reason to move away from the market weights here. But it's still your portfolio, and more importantly, your retirement. If investing in emerging markets is a stumbling block for you, that's fine. Find the portfolio that will help you stay disciplined and keep you moving towards the retirement that you want. And if you're thinking about how to make sure that your investment portfolio will be able to help you reach the retirement that you want, you should take a look at our ebook, The 9 Principles of Intelligent Investors. This will help you understand the framework for thinking about how the markets work and what that means for how you might want to structure your portfolio. We've got the link in the description below, but you can also just go to retirementresearcher.com/principles to download it. There's a lot of really great stuff in there, including some more about why we care so much about starting from the market portfolio. If this was helpful, be sure to like this video and subscribe to our channel so you can see what we're up to. If you have any questions on this or any other questions that you'd like me to address, just drop them in the comments below. You can also check us out on the web at retirementresearcher.com and make sure to sign up for our weekly newsletter to keep up to date with everything that we're doing.